Hi all, a very good afternoon to one and all. The market got caught in a bear trap with the benchmark indices falling around 2.5% in the week ended October 30, dented by the weak global cues. Investors as well as traders turn cautious ahead of US presidential elections next week and due to worries over global growth following an increase in restrictions and coronavirus infections in the US and some European nations. The BSE Sensex closed way below 40,000 mark, down 1,071.43 points or 2.63% at 39,614.07, while the Nifty 50 fell to 87.95 points or 2.41% to the 11,642.40 as all sectoral indices bearing energy closed in the red. As the sentiment is expected to continue to be driven by global cues given the US elections and rising economic restrictions, the bears may be in a strong positions in the coming week too, along with the same consolidation experts feel. As the sentiment is expected to continue to be driven by global cues given the US elections and rising economic restrictions, the bears may be in a strong positions in the coming week too, along with some consolidation experts feel. On Monday, market will react to Reliance Industries and ICICI Bank's quarterly earnings, while auto stocks could also see some reaction following October sales data. Domestic markets are expected to sentimentally imitate their global counterparts in the coming week, especially since the US elections is a major event. Until then, bourse could remain the lackadaisical as unconsiderable delivery-based buying or selling is emerging at current levels, while likely suggests that markets would remain range-bound. Investors are advised to keep their shopping list ready for the next week and embrace buy-on-dip strategy in frontline quality stocks. Foreign institutional investors also offloaded some shares in later part of the week, but they remain net buyers overall to the tune of Rs 972.66 crore, taking the total buying in October to Rs 14,537.40 crore. However, the domestic institutional investors remain on the selling side as they sold Rs 2,170.78 crore of shares in the week gone by, taking the total outflow to Rs 17,318.44 crore for October. Now, here are some key factors that will keep the traders busy next week. The first one is the US presidential elections. The market is expected to see some volatility as well as selling pressure given the political developments related to the 59th quadrennial presidential elections in the US, which is scheduled to be held on November 3rd. Media reports indicated that the elections campaign seems to be pointing victory for Democratic candidate Joe Biden over Donald Trump. If the candidate failed to get a majority through electoral college, then the House of Representatives selects the president of the country among top 3 candidates who get most votes. Next one is the earnings. The September quarter earnings season will end in next fortnight, that is before Diwali. More than 650 companies will declare their quarterly earnings in the coming week ended November 7. Please find the names of major companies which is scheduled to announce their results in the coming week. And the next one is the moratorium interest case. Banking stocks will be in focus as the next hearing in the Supreme Court on the much-awaited loan moratorium case is scheduled on November 2nd. Experts feel the verdict is expected to be in favor of the banking sector in the passing week. The central government already informed the Supreme Court that lenders have been directed to credit the difference between the compound interest and simple interest for 6 months of moratorium period on loans up to 2 crore to the accounts of eligible borrowers by November 5. Now let's check about the coronavirus. The coronavirus seems to be in control in India given the improving recovery rate, but the rising cases in the United States and the Europe forced some nations in Europe to impose the tighter restrictions. United States reported nearly 99,000 cases on Friday, the highest in a single day so far, ahead of US elections taking the total reported case over 91.2 lakh with over 2.3 lakh deaths back in India. The recovery rate was around 91.5% on Saturday against around 90% last week, while the fatality rate remained around 1.5%. India reported more than 81 lakh confirmed cases with around 1.22 lakh deaths, but the active cases were below 7 lakh now. The next is the economic data points. Market manufacturing PMI data for October will be released on Monday, and market services PMI for October on Wednesday next week. Experts make the data to be positive as recovery is seen across sectors in September. Manufacturing sector activity jumped to the highest level in more than 8 years to 56.8 against 52 in August. While the services activity also improved for the fifth consecutive month in September to 49.8 against 41.8 in August. Foreign exchange reserves for week ended October 30 and bank alone and deposit the growth for the fortnight ended October 23 will be released on Friday. India's foreign exchange reserves reached to a fresh all-time high of billions, rising by $5.4 billion in the week ended October 23, $560.53. Now let's check about the listings. Equitas Small Finance Bank will be in focus next week as it will debit on borrows on Monday after the issue price was fixed at Rs 33 per share. The Rs 518 crore public issue was subscribed 1.95 times during October 20 to October 22. Now let's check about the technical view. The Nifty 50 shed 0.2% on Friday and formed small bodied red candle which resembles the doji kind of pattern on the daily charts, while it declined to 0.4% for the week and formed a strong bearish candle on the week scale. Experts feel the index need to sustain above 50-day simple moving average of 11,549, which tested intraday on Friday. To avoid further correction, as of now, there seem to be critical support around 11,500 levels on weekly charts, and if the index closes below the same, then it can significantly damage the medium-term trend with initial targets placed around 11,100 levels. In case the Nifty manages to stabilize and bounce back from current levels, then initial hurdle is placed around 11,750 levels, and if it clears the same, then the recovery can extend further to 11,850 levels. The next one is the F&Qs. The number series started off on a negative note and experts feel is expected to be volatile one. The option data indicated that they could remain in a wider trading range of 11,200 to 12,000 levels. Maximum put open interest was seen at 11,000 followed by 11,500 strike, while the maximum call open interest was at 12,000 followed by 12,500 strike. The marginal call writing was seen in 11,600 and 12,000 strike, while put writing was seen at 11,200 and 11,300 strike. On the rollover front, the Nifty started the new series with almost 10 million shares against 8.5 million shares seen in the last series. The roll spread in both the Nifty and the Bank Nifty turned negative suggesting marginal short formation ahead of the US election output. The volatility index has risen about 25% for the first time since July, while the US VIX has moved towards 37 levels. The Indian indices are also likely to remain volatile. However, from an option perspective, immediate support for the Nifty is near 11,500 strike, while the major support can be seen near 11,200. On the higher side, the 12,000 is likely to remain a hurdle for the Nifty in the coming weeks. Now let's check about the global cues and the FOMC meet. The Federal Reserve, after its two-day meeting, is expected to keep the federal funds rate unchanged at 0 to 0.25% in the midnight on November 5. But this inventory is the key to watch out for given the delayed fiscal stimulus and fast rising coronavirus cases in the United States. So that's it for today. I will be coming with the market updates on tomorrow, and all of you please stay home, stay safe and stay healthy, and please don't forget to subscribe our channel, and please don't forget to share our video with your friends and relatives. Thank you.